Using indicators is an important part of trader strategy because it helps to better understand price trends, regardless of whether you're interested in trading, binary options, forex, and so on. This is something that you need to study one of the first. My name is Lara, and this is a now video from a series of trading videos on trading, and today I will tell you all the most important information about trading indicators. Click the like button, subscribe to the channel, and let's dive into a new topic. First of all, what are trading indicators? Trading indicators are mathematical calculations. They are shown as lines or as points on the price charts and can help traders identify certain signals and trends within the market. So there are different types of trading indicators, including, for example, the leading indicators and the lagging indicators. And the leading indicators are focus signals that predict future price movements. And as for lagging indicator, they look at past trends and indicate momentum. And of course, before going into the best indicator combinations, it's important to understand the difference between the tools. And all indicators also are divided into several categories according to other sources. So right now I can share with you the following ones. And the main type of trading indicators are the following. The trend indicators, the momentum indicators, which can be also called oscillators, the volume indicators, and the volatility indicators. So let's consider them. The trend indicators, trend following indicators, smooth out the price and follow the trend line of the chart. They're based on the past performance of the asset and may show the market trend and its strength. So these indicators are often placed on or around the chart line, and they include the indicators such as Ichimoku cloud, zigzag, and others. And here is the representation of the Ichimoku cloud and zigzag on the platform called Quotex. The next ones are momentum indicators. We can call them oscillators, and these indicators aim to determine the overbought and oversold levels and find the potential price reversal points. So this is what they're made for. They're usually displayed under the chart, so it's easy to distinguish them from other tools. And for example, there may be the MACD, the Awesome oscillator, and the RSI. So I'm having here this picture with the MACD, Awesome oscillator, and the RSI being represented on Quotex platform. So let's go further and let's go and consider the volume oscillators. So the volume oscillators, this class of indicators show the volume of a traded asset. Tracking the volume is useful in order to see how strong the price movement might be. So that's what they're made for. And there aren't so many volume indicators because they mainly focus on the one function. One function is on the volume, of course. Using them in trading indicator combinations, you may increase the accuracy of indicators. So let's talk on the volatility indicators. So the volatility indicators, these indicators show how much the price of the asset, how much the price of each currency ratio is changing in a set period. So the price has to be volatile in order for a trader to be able to trade it, but high volatility is associated with a high risk. So one of the examples of it is Donchian channel and, for example, the ATR. The most popular indicators are the following ones: RSI is the relative strength index, SMA, moving average, Stochastic, MACD, moving average of convergence and divergence, and Bollinger Bands. So let's talk on how to combine trading indicators, because when combining indicators, it may be preferable to use indicators from different groups. For example, you may use several indicators from the same type, but it cannot be specific. It can be so efficient as the indicators of several types. So let's check some examples. I will give you 3 trading indicator combinations that may be applied in different approaches. So this should be the RSI and the Bollinger Bands, the SMA, simple moving average, and stochastic oscillator, and ATR with the Parabolic SAR. So let's go and check them, and I'm going to use the platform called Quotex. Guys, if you have watched up to this point, then most likely you are really interested in the topic of trading. Therefore, I will take the opportunity to remind you about my trading community, which is now turning into a whole trading academy with a lot of trading materials, useful content, analysis of strategies and trading signals for both beginners and professional traders. It's all absolutely free, it's all done especially for you, and that's why be sure to follow the link in the description under this video and check it for yourself. And let's get back to our topic. I will show that right here as far as you see, and I had set up the Bollinger Bands and the RSI. And what shall I tell? First of all, the RSI is an oscillator with a standard level of 70 and 30. And this is quite perfectly displayed on the chart. It's a line that fluctuates between the values of 0 and 100, and that's it. When the line gets close to 70, the asset may be considered overbought, and when it approaches, for example, 30, as here it may be a little bit more close to 30, it may consider it as oversold. So as for the Bollinger Bands, they consist of 3 lines. One exponential moving average, and 2 price channels above and below. It shows the periods of high and low volatility of the asset of each currency ratio, for example, as here. And more wide apart the bands are, the higher the volatility and the stronger the movement is. So let's go and consider the SMA and stochastics. So I will click here, I will delete this, and I will show you the simple moving average and stochastic. And here I'm using the simple moving average, which is represented in the moving average box. Okay, and I'm using this stochastic. The stochastic is situated in the basement oscillators, in the sector of basement oscillators. So, well, this is the second one of the popular trading indicator combinations, and the simple moving average is considering a basic technical analysis tool by smoothing the price fluctuations and also reducing small insignificant swings. And by making those types of situations, it may help identify the real market trend. So that's really awesome, guys. And the stochastic oscillator in combination with the simple moving average, it displays possible overbought and oversold levels. It's a leader and it's a leading indicator. So, and it's perfect in cases where it may provide a trader with indications of possible price reversals as far as the RSI does. So I think that we should go and consider the ATR and Parabolic SAR, and I'm going to click here. I'm going to delete the moving average and the basement oscillator. Okay, and I'm going to show you the ATR. Okay, which is situated here. I will leave it default, and the Parabolic SAR is set. Okay, and we're having this combination, and this is the third one from the popular ones. And ATR is volatility indicator. It doesn't display the direction of the trend, but it measures how volatility of the market is. So when the market is unstable, it might show potential trading opportunities at the same time. It may be helpful in deciding of the appropriate stop loss levels, but we're using the binary options, and sometimes it can be useful in other types of trading. So in moments of high volatility, there is a higher risk with trades, which might be managed by, for example, with stop loss, but using it with ATR, or using it with the Parabolic SAR, with a trend, which is a trend indicator here, being represented. So traders may look for entry points during a trading market. That's why that's the real key. And well, guys, in conclusion, I should say that the trade indicator combination may be a strong technical analysis, pretty of a strong one by implying several indicators from different categories, such as ones from the first part and others from the second part, plus the basement part, of course. In using the several combination, traders may get valuable insight into the market trends, into the volatility, into the trading volume, and more to make more informed decisions. It's very important, guys. So that's why they're using it, and that's why they're so popular. I have tried to explain this topic to you as simply as possible. If you like this video, then I will be grateful for your activity on the channel. Also, don't forget to subscribe to my Telegram channel, and I'm really investing a lot of time in it right now. So the link is always in the description, and watch all the videos from the tutorial playlist, and see you guys very soon.